Hello and good morning, feeders. Today is February 1st, 2022, and my name is DJ. Joining me today, as always, we have Feeder Finance Pat. Pat, if you'd like to say hello to our lovely users at home.
Hi guys.
Hey, so, starting off with a little TLDR, we'll be talking about peer-to-peer lending. We have officially launched on our third chain, AVAX, so we'll be talking a little bit about that and some of the new Vault product offerings we're offering there. There's also been some portfolio improvements that we will touch upon briefly, and some other minor updates as well, completed by Pandit and Raphael. So, yeah, let's get right into the meat and potatoes, as our feeders love to say. Peer-to-peer lending. How's it going, Pat? Give me a bit about it.
It's going great. Um, so as you know, we're trying to make sure the UI is looking great and it's easy to use. That's the most important part because I guess the product is really simple, right? You're just it's just two parties lending to each other, agreeing on a set of terms, but we're also trying to make sure that the UI is simple enough, especially with regards to the mechanics of how the loans and the interest and so on works, because essentially let's say the term is five days or 7 days.
Mm-hmm.
You're basically, you have to, as a borrower, you have to pay before the loan ends. Not, there isn't like a time uh post the term ending that you have a set of hours to pay back. That's not how blockchains work. Blockchains basically saying you have to pay back at this block, and if you're not paying back, the loan has defaulted, and the lender can basically liquidate you. So you're probably going to be paying it's some amount of hours, or maybe a day, or maybe even 2 days before the loan officially ends. What that means for you, however, is the there is an option that we have created for the loan,
Okay.
whereby you could either select to have the interest be paid pro rata, or have it fixed, and that's up to you and the lender.
Okay.
So technically, you could be borrowing at a fixed interest. So whenever you pay back, it doesn't matter. If you pay back a minute after the loan starts, you still pay the same amount of interest you should have paid if you're borrowing for 5 days. So that's not pro rata.
Right.
You could do pro rata where, if you're borrowing for a month, but you paid back within a day, you're only paying interest for that day and not for the remaining 29 or 30 days.
Mm-hmm.
Um, and so what we're doing is sort of making sure the UI is reflecting that these steps where you start the loan. This is how much time you have until you have to pay back the loan. But also adding infographics with charts to show you where you are in that sort of cycle, and what the interest is at this point, and what it will be, tomorrow, in the next 2 days, or by the time the loan ends. Um, what is also cool is that we'll also show, with our infographics, or these charts, what your collateralized assets are earning in the same time.
Hmm.
So instead of only seeing that, all right, today, if I pay back my loans today, I would need to pay, $10 in interest. But it would also show you that so far, since the loan started, your vault has earned you, say, $15 in returns. So you're netting $5 on this whole operation, right? So technically you're not paying anything. You're getting your money for free because your investment has created more returns than your actual cost of borrowing. And we want to make sure that that's super clear visually, because it could be hard for some people to sort of visualize how that works, because essentially you're at the same time you're handling two different investments. On the one side, you're borrowing money where you're paying interest. On the other side, the collateral that you'll need to borrow is also earning money for you. and you're netting those two incomes, income and expense streams, so the inflow and outflow streams, right? One side going to the lender, the other side coming to you, and you're netting that out. And we want to visualize that, and so that's what we're working on. And I've already seen some sneak peeks from Jimmy yesterday. It looks pretty cool, pretty cool. Especially because we actually see that you're getting these loans for free. That's super cool. Besides that, the cool thing really is that you're not only do the borrowers getting these loans for free, if you manage your collateralized assets well enough, as in you're selecting an asset that's earning high interest, hopefully more stable interest, and the prices don't swing too much and stuff like that. So that's sort of the part you need to work on yourself as a borrower. But if you can do that, you're basically getting the loan for free. But what's cool is also that the lender is also getting higher yields for their stables, right? Because let's say you're earning 300% or 200% on your vaults, and you're only collateralizing, or you're only borrowing 30% of the loan of the collateralized value, right? So you have $100 in collateral and you're borrowing $30. That $100 is earning 100%, and you're paying interest on only $30. So there's so much room to actually play with how much interest you're paying the lender. And so essentially what I think will happen is that instead of people with a lot of USDC being able to lend it at, on SVM at Geist, or on bias margin at Venus for 6-7% at the moment, I think you would be able to lend your USDC for 30, 40, maybe even 50%. And that's over collateralized loans, right? So you're not taking more risk not a lot more risk than you would typically.
Right.
I guess the only additional risk would be the fact that it's still locked in terms of, if you're borrowing for 5 days, you're still locked up for 5 days, which is not the case when you're lending in lending pools. But that will also change once we have the marketplace up and running, where you can basically liquidate your loans by selling it right away. So that gets rid of that part. So yeah, any questions for me on that?
I guess, will there be, so you've mentioned that there will be infographics and things all along the way to be able to help explain the process and make it a little more straightforward. Will there perchance be some sort of walkthrough video or something to show the process, just as opposed to a document?
That's a good idea. I guess that's not hard to do. I guess we can do that. That's a good idea. Because what I'm hoping to do is to use these UI to support the roadmap, but also build our documentation in the docs to explain all of this. So I guess it's sort of something like a run through of the entire operation in videos might make sense. Yeah, I'll do that. Yep. Thanks.
Yeah. That's my first immediate question. Yeah, no, nothing else at this time. We'll probably circle back to it as I think of more. But a lot of great stuff there. I'm really excited to see it. Here's my other question. When can we expect to see this? Probably the next couple weeks, next week.
So I think our hope is to get it sort of the entire UI done this week.
Okay.
Because we're quite far along. The main UI is done. The thing that's left is we're building these interactive charts.
Right.
That's customized for every loan. So it sort of needs to be somewhat flexible, because you have different things going on for different people. So that's what we're building. I think we're hoping to be done this week. So once that's done, then I'll get started on rewriting the roadmap and putting all that stuff in. In the meantime, we're also probably going to test it and maybe invite some people, masters, grandmasters, to sort of beta test in case there's any anything we sort of overcomplicated or oversimplified, or it needs to be sort of adjusted based on some initial user comments. So we'll work on that, and that hopefully next week, getting it done. So I guess don't quote me on this, but I'm hoping next week we'll have we'll have our roadmap designs and stuff sort of finalized, and whether or not we're ready enough to release it by next week, TBD. But I think by next week we should have everything, I hope, ready. But it'll also be subject to Jimmy's approvals of things of it, whether it's ready to go in his view, because he's working the development stuff on the back end, and if it's still somewhat buggy, not quite as efficient, if it needs to be rewired on the back end because it's not as fast or whatever, that's always a possibility.
Yeah,
But
yeah. Sure.
yeah,
Mm-hmm. So,
yeah,
I
but
tried,
yeah,
guys. I tried. All right. Well, in other news, we've officially launched on AVAX. Big step for feeder finance.
yep. So we launched on AVAX, our third chain. Initially, I think we launched 12 products, all just lending on Banker Joe and Aave.
Mm-hmm.
Nothing too exciting. If you're into just simple lending stuff, lending or stables or your ETH or BTC. So that's that. And what we're going to be launching this week will be some of the LPs, so the auto farming products,
Mm-hmm.
which will come at higher APYs. And I guess the cool thing for us is basically that you're basically comparing all of these products among all of these chains, right? So now once we have AVAX, you're comparing AVAX yields with BSC and Phantom yields. You can start, and given how easy things are to bridge these days, especially among these bigger chains, you could just be moving money around to wherever you think the best yields are for your tokens. So that's coming, and we're hoping to get all of AVAX out this week, unless we're hitting roadblocks on the lending part and we need to focus there. But our hope is to get it done this week, so we'll have AVAX sort of covered within that week or this week, and then we'll start to have that sort of we'll probably ask you guys again where the next chain will be. Thinking of that, I just some back end work stuff came up to my mind about this whole thing. So many pieces going on. But yeah, so AVAX done this week, and then we'll look at the next chains. And so we're basically going to be launching into all these, at least all of those chains you see in the picture. But yeah, but that's not all of them, right? I mean, EVM chains are now, I think they're in the 15, 16 EVM chains out there these days. But we'll probably go by some in some cases we'll probably look at great yields, but in some cases probably just popularity, because like AVAX was something everybody was asking for like forever. And we didn't really look at what the yields are on AVAX, just because we know you guys wanted AVAX, we'll just push AVAX out. But the next one might be more focused on where great yields are. And you guys can do your own research there where things are, and maybe figure out where we're going next. But so that's the plan. So we're going to pretty much everywhere pretty soon, because again, that the vault part and the lending part is highly intertwined, because that's the whole like pitch for our lending, right? That's something nobody does, where you're not only lending, but you're vaulting your collateralized assets too. And that's why it's so important that we develop our products as well as lending sort of going together, because the more coverage we have for vaults, that means the more useful our lending product is on all of these chains. So that's the rationale.
Would it be safe to say that you're revolutionizing the DeFi 2.0 after the failures of other DeFi 2.0 projects?
I think what uh, I think revolutionizing DeFi in general, but it is, I think it is quite revolutionary because the thing is, and a lot of people are talking about how DeFi is a Ponzi, right? How liquidity, how DeFi 2.0 is trying to sort of um, solve the Ponzi by having treasury owned assets, but technically they're still a Ponzi because they're using that treasury to buy back their own token. So that's, I mean, it's still pretty much a Ponzi to me.
Right.
Um, the thing that we change is that instead of minting, instead of the project minting tokens to pay everyone or using its assets like a treasury to buy back its own token, we're actually utilizing two important pieces of the DeFi economy. One is the yields generated from lending and borrowing and people giving out their tokens, because the vault yields are coming from trading, swapping, it's coming from farms, it's coming from lending and other incentives. So that's one portion of DeFi. The other part is basically how people are lending among each other, right? And that's the new part. And instead of us trying to incentivize that activity with our own tokens, we're basically using everybody else's money to incentivize that and allowing the users to customize the deals themselves. So I guess that's where it's by no means short-lived in terms of the product dies when our emission ends, or the product dies when a token price declines or whatever, which is the case with every other project out there, right? I mean, any Ponzi economics dies when token price starts to fall because
Right.
it then feeds into itself and starts to create this sell and cascade and stuff. This product is super independent to anything out there because we're using everybody's token price, right? We're using every chain. And it's all just organic stuff. Like even if everybody stops rewarding, but they're still trading, there are still yields on the AMMs. Like even if PCS stops giving out cake, or Spooky stops giving out Boo, there are still people swapping and trading, and that means there's still organic yields that can then be used for our collaterals to earn while you're borrowing.
Right.
So it's just I feel like it's just pretty amazing what this lending plus the vaulting can do, and it's pretty cool that nobody's done this before. And I guess it's just by our sort of luck because this wasn't the plan, right? We're just basically every day we're thinking about how to make our project better, how to create more value for our users. And initially we started with some complex vaults, and then we go into vaults, and now we're sort of seeing like, okay, we have all these vaults, how can we create more value with all these vaults that we have, right? And that's creating this lending thing that sits on top of the vaults. That's pretty cool. And the project will continue to innovate and think about how to use what we have and create things that are more creates more value for our users in the DeFi economy. So yeah.
Yeah. No, you freaking nailed it there, bud. um, yeah, we're always striving for excellent work here. So great job, guys. The last bit of our meal here for our hungry feeders at home is just some minor portfolio improvements. You want to talk a bit about that? It looks like the backend has gone through some major upgrades there, and yeah.
Yeah. This is, I guess it's not something it's not flashy, right? It's not something it's not like the staking page getting a whole makeover. But the thing was that this got a lot of work and has been in the works for months
Mm-hmm.
because the portfolio has always been our sort of our weakness because it's pretty, like, you don't realize it's pretty complex what's happening in the back end for the portfolio because we're pulling, like, we have hundreds of products, and the portfolio needs to basically check your wallet,
On
whether
all
you
of
have
them.
any of, yeah, on all of them,
Oh
right?
yeah.
And that's on the blockchain, right? Like we're pulling data off the blockchain to see which products you have, and
Mm-hmm.
then using that data to then calculate your total investment, so adding them up and pulling the other data where we need to calculate what the APYs are for each of these products, and then getting your average APRs and your daily, weekly profits, monthly profits, all of that. That's all, like all these calculations happening on the back end. And it's sort of, we added them one at a time, right? Because like before, we're sort of just thinking every day about how to improve. And then, once we have an idea, we say, let's do it. And then we put it on top of everything else. And because we were so in a rush of pushing stuff out, we didn't have time to sort of rewire things on the back end to improve efficiency, because that's what you need after, a couple of months of just building things on top of each other. Like the things start to they can't handle stuff
Oh yeah.
as efficiently, right? And the portfolio has been quite slow before, and so Jimmy spent some time, because of how the whole market crash caused Phantom to congest, and that delayed Jimmy's P2P lending development. So he, instead of just sitting and doing nothing, he went ahead and started rewiring the back end for our portfolio. And now basically the experience is, instead of waiting like 5 seconds for anything to load up, it sort of loads up right away. Whatever is possible, it loads up right away, pretty quickly. And even the product itself loads up quite fast. Like in my test account here, I have like 100 vaults because I test all of them and I keep some inside just because I need to sometimes check.
Mm-hmm.
And for that, I need less than 5 seconds to get everything up and running, which wasn't
Wow.
the case before.
Right.
But that's one piece. The other piece was that we also developed something pretty cool on the back end where the thing about RPC node inefficiencies is that, we're pulling data off the RPC block by block, right? And
Yep.
sometimes when there are congestions, when there are sync issues between the blockchain and RPCs, information is incomplete within the let's say the latest block. There's incomplete information, and once you have one incomplete information, for us things start to break down, because it's like an equation, right? Like once there's, or if you have modeled a spreadsheet before, you know that if there's an error in one of the data points that goes into like a big equation,
Oh my God, it
the
screws
output,
everything up.
it screws. Yeah, exactly. And that's how it works, right? So once there are RPCs sync inefficiencies and one data point goes missing or has an error, the entire thing breaks down.
Mm-hmm.
And that's why this whole thing is so complicated. So what we've done is basically and we haven't seen anybody do this, but what we've done is basically we have created an automatic review of the latest, say 5 to 10 blocks coming from the RPC, and it would automatically check which of those most recent blocks have the most complete information in the data. And the UI output would automatically select out of the most recent 10 blocks, let's say, the one with the most complete information, so that it minimizes as much as we can any errors or any data going missing, because it's not always the case that if one data misses, everything falls apart, but
Right.
it could happen. But most of the time these days, because we've had so much work put in so much work, we sort of have our ways of fixing that. So instead of the whole thing crashing, one data point might be missing, which just spins and spins. But with that whole automatic best block selection mechanism thing, I don't know how to call it. We sort of have to name it because nobody has done it before. It's now also, hopefully, when there are more congestions in the future, that our portfolio and our UI will handle things better. So yeah, that's also what we've been working on.
Honestly, it's a really unique way to tackle the problem. So great job, Jimmy, and great job, Pat, for helping out with that. That's awesome. I believe that's all we have for you guys, except for a few minor updates. I'll let you cover those, Pat.
Yeah, so because Jimmy is super focused on, our vaults and P2P, we're just sort of stacking up the work that Pandit and Raphael are working on and on the back end before it gets pushed out, because Jimmy sort of needs to have that final review before it gets pushed to production.
Sure.
Um, but there's a lot of fixes, a lot of some copy edits suggested by our community. Thank you, Jay. And so that's waiting. I think the one cool thing we're waiting for to get pushed is the investment page, or the invest page will now have the ability to filter your deposited products. I think that's something people asked for a while. And eventually then you will have to be the ability to deposit and withdraw at the investment page instead of going to the portfolio. But for now, let's just, start with filtering your deposits, so that sort of narrows things down. Um, some other UI stuff. Let me see. Yeah, I guess you'll probably see there's a lot of stuff here, but just too much details to go through. But I guess just expect a lot of cool things getting pushed out and fixes, and minor UI changes. Also some stuff changing on the S feed page as well. So that's coming out once Jimmy has some time. I guess once we're hopefully done this week with designs and stuff, and Jimmy has some more time on his hands, we'll circle to these smaller minor updates.
Yeah, absolutely. And shout out to our community members helping us out there. We really appreciate you guys. I believe that is all we have for you this week, folks. Pat, is there any closing remarks you'd like to say for our lovely users at home?
Oh yeah, I just want to say thank you everybody for your patience with us. I know we were hoping things would be released a lot sooner, but it didn't happen, and we really appreciate how nice you guys are about it. There's not a lot of pressure coming towards us, which is nice because it helps us keeping our sanity and creativity and being thorough about things. So appreciate that, and we're working super hard to make sure when it is released, it's super cool, and we hope you guys will like it.
Well, I think our community members agree when it comes to their money, they don't want any risks taken with it. So I think they'll be happy when they see the finished result. It really is a beautiful product, and I'm sure everybody's gonna love it. So I'm excited for it, and so that's all we have for you this week, folks. Thank you for tuning in. Be sure to like, subscribe, all that other fun jazz. Share it on your socials, and give us a shout out. Let us know how we did. Let us know what we can improve, and Pat and I will be back at it again next week. So thanks for watching, guys. Bye-bye.